Kenya's inflation maintained an upward trend for the fifth month running on the back of higher food costs, interest rates, and the ongoing El Niño rains, according to data released by the Kenya National Bureau of Statistics. November inflation stood at 7.32%, up from October's 6.72%. The food and non-alcoholic drinks index rose by 1.08% between October and November. Kenya's year-on-year inflation rose by 20% from 6.09 to 7.32%. with analysts stating that this figure could surpass the central bank's 7.5% targets by the year's end. The new figures come on the back of heightened anxiety over a possible rise in interest rates from the United States Federal Reserve, which analysts have cautioned could cause a substantive dent in the country's economy. According to these analysts at the Standard Chartered Bank, Kenya's business sentiment indicator fell by 8% month-on-month to 59.5%. Treasury last month cut Kenya's growth forecasts for 2015 for the second time in less than 2 months, with growth now expected to be in the range of 5.8 to 6.0% from 6.5 to 7% projected in June this year. And fraud in Kenya's insurance sector is yet to slow down, with more cases reported in 2015. According to the Insurance Regulatory Authority, 90% fraud cases have so far been reported between January and November, costing the industry 300 million shillings in false claims. Philip Keitany reports.
Over the years, the insurance sector has struggled to increase its penetration among Kenyans, with its largest stumbling block being the poor perception of the sector by most Kenyans. And as if that was not enough, fraudsters have invaded the sector, conning both the insurance companies and the public of millions of shillings, threatening the future of the sector. In 11 months, insurance firms have lost 300 million shillings to fraud.
Fraud continues to be a problem, with perpetrators continuously devising new ways of conducting their activities.
The money lost through fraud could, however, be a conservative figure, as not all cases get reported. According to IRA, of the 90 cases reported between January and November, only 4 have successfully been prosecuted.
A very small fraction of fraud cases are even reported in the first place. Many are those that go unreported for various reasons.
However, according to Insurance Fraud Investigation Unit, over the last 5 years, there has been a sharp increase in work-related injury claims as well as medical-related cases. Theft by agents has been singled out as the most prevalent form of fraud in the sector, accounting for 23%. Motor accident injury claims coming second at 19%. Motor accident damage claims 18%. Medical claims 17%. And theft by employees accounting for 7%.
We have the prime suspect in this particular case. We arrested him. I will not disclose the place where we arrested him. That particular case is still under investigations. So what this ambulance chaser used to do, when he goes to the police station and realizes probably he has been discovered, he makes a stamp for the nearest base commander, traffic.
According to the regulator, insurance fraud continued to take new shape due to the automation and new innovation to business, and traditional approaches used to tackling fraud may be inadequate. Therefore, it is important to note that fraud is dynamic, and when a strategy is identified and barriers put in place to prevent its reoccurrence, another one is muted. Philip Keitany, KTN Business.